Lexington Gold has come out of a reverse takeover of global asset resources by AIM-listed Richland Resources. The chief executive of Lexington Gold is Bernard Olivier, who joins us now from Cape Town. Bernard, it's good to talk to you. Exciting venture that you've come across here. I know that you've only recently been appointed. Just explain what it is about this deal that you like so much, and what does it give the potential investor?
Well, thanks very much for the opportunity, firstly. And yes, you're absolutely right. It is a very exciting project. And when I looked at what it is going to affect the company and how it is structured, I thought it's a fantastic opportunity for Richland to now come into its readmission process and come out as Lexington Gold with 4 projects in the Carolinas that is specifically structured in a way that shareholders benefit from the project succeeding and the vendors only through the project succeeding. So it is not a cash deal. It is a vendor share deal. And the way that it's structured, it's money in the ground and money directly in progressing this project forward. So a very well structured deal for shareholders.
As at the time of recording, I know that Lexington itself doesn't list, or it's not listed yet, doesn't trade, but it is still under Richland Resources. But that is going to change in the next few days. But my understanding is that part of this deal, you've raised 3.3 million sterling. What are you going to do with that money based on the fact that you've done this deal through shares?
Yeah, absolutely. So you're absolutely right. At the moment, we're still trading under the name Richland, and that's only because post-shareholder approval, we were able to file all the documentation to retrade as Lexington Gold and rename it. But that process does take some time, especially now with COVID, where things are a bit slower. But we're expecting to be trading under the Lexington name in the next week or so. In terms of your question with the use of funds, you're right, we've raised 3.3 million sterling. And as part of the transaction, the money is all going into the ground as part of our majority ownership. And we're planning a very extensive work program for it. We've got 2 of our 4 targets that is effectively drill ready. And the other 2 targets is currently in the process of getting, especially the Jennings Pioneer project, is getting geophysics and a modern type of geophysics, which is V10 aeromagnetics and helicopter-borne geophysics done on it to identify additional drill targets on that license. So, we're sort of hitting the ground running and immediately going to start with both a combination of drilling in order to establish resource and its maiden resource, but also on the other 2 projects, additional geophysics, which can then be followed up with drilling.
How confident are you of being able to proceed and go through to a first gold pour?
There is a number of factors that's making me quite confident about it. Firstly is, if we just looked at the area that we are, the Carolina Slate Belt, or Carolina Superterranean as it's now called, the area has got a very long history of gold mining. And all 4 of our projects have got a history of historical gold mining on it. But the area, for some reason, has really gone unnoticed over the last sort of century, despite that historical gold mining and a lot of gold activities. I mean, in the 1800s, it was the biggest gold producer in the USA until the Californian gold rush came in. Since then, very little has happened in the Carolinas in terms of gold exploration and gold development until about 2005, when a TSX junior, Remarco Minerals, started doing their exploration and modern exploration techniques. And they took a project with historical mining like ours, the Hale Gold Mine, and through modern exploration techniques, they proved it up and ended up with a total resource of 4.5 million ounces. Subsequent to that, they've got all the permitting and everything else done. And currently, that mine is operational. It was eventually bought out by Oceana Gold for around 850 million Canadian dollars. And it's a fully operational mine and a very low-cost operational mine, that is. So I think that shows us that not only is it a very exciting area that we are in, but it's an area that proves that it can go into production, all the permitting can be done, and it is also a low-cost producing area.
Okay, well, all this in mind, what is the plan of action then from now? And what is that 3.3 million going to be able to allow you to do?
Well, we're almost not trying to reinvent the wheel, and we're looking at what Remarco achieved with their exploration program, the successes that they were able to achieve on their project with the techniques that they used, and we're using a lot of the same techniques that they've done. As I said, we are starting a helicopter-borne VTEM survey very shortly. We're also following that up then with drilling at the JKL property. And the JKL property has got a lot of geological similarities to the Hale mine. And it's also the most advanced of our 4 projects. It's already got existing drilling on it. But the drilling weren't enough to ever get us to a resource stage. But we've got the historical drilling, and we're going to incorporate that historical drilling with our own drilling, as well as we're putting all of the historical data together in a 3D model and a mine model or exploration model in order to define where we need to drill to take this forward to a resource level in various stages. So stage 1 will be the upcoming drilling at JKL, which is diamond drilling that we are planning. And then we've also got the Carolina Bell project, which is a very exciting project. It used to be 2 historical mines right next to each other, but with different ownership. We've managed to now, through this acquisition, combine the ownership of these 2 neighboring mines. And the Carolina Bell, again, has got a history of gold production with about 45,000 ounces of gold previously produced from it, but all on a sort of small scale, and no modern exploration was done to see how big is the resource and how much it can be expanded. So in a nutshell, it's taking historically producing operations, just like Hale was, and applying modern exploration techniques to make it into a resource that is attractive for the majors, and that we know that we can also take forward and eventually into the mining phase.
You must be champing at the bit to get going on this. What is the first thing you're going to be doing? How long is it going to take? I'm not too sure about the weather in where it is you're drilling. Is there a winter close down period, or are you able to work through winter?
There's not a specific winter close down period in the Carolinas. It does get quite wet at the moment, but we preparing the drill pads, getting ready to commence drilling, getting the drill pad approvals from the EIA center. So we are getting all the permitting ready for the drilling to commence, and we are hopeful that the drilling might even commence before Christmas. Otherwise, it will be shortly into the new year. And then on the other side, the helicopter-borne VTEM, that is basically happening as we speak. So we will have our preliminary results from that probably in the next 2 weeks.
Yeah. And of course, along the line towards the production, whenever that is, of course, you will undoubtedly have to address the thorny issue of trying to raise money. But I guess going into this sort of market, you're sitting quite pretty because the gold price, okay, we're off the highs. I think recently we had almost $2,100 per ounce, US dollars per ounce. Here we are now at 1770 or so. So it's been a bit of a pullback. But I guess broadly speaking, it should in theory be quite easy for you to raise money in this sort of gold market.
I think also, given the amount of money we have raised now, that gives us significant ammunition to go and do a lot of work on the ground. So we're not having to come back to the market in the next 6 months even to raise more money. And there's at least a year worth of work program that we can implement with this, and it will then bring results back to the market. And the market can, on the back of the results that we achieve, can decide if they want to fund us further or not. And you're absolutely right. The gold price is clearly supporting our venture and also the money that we've raised. But despite that, I believe that looking at the overall cost, even the long-term cost of gold production is quite important. And where we are, it potentially is similar to Hale. A very low-cost producing environment. There's good infrastructure, there's the right skills available, and as I said with Hale now, they're looking at a all-in sustainable cash cost for their operation of about $850 per ounce. So even if there is further pullback of the gold price, it is about having gold production that is still highly profitable, even if it does drop back a bit.
I know you're not a gold analyst, and I guess it's a little bit unfair to ask about your thoughts on gold, but the people you're talking to, obviously you've got to plan your strategy around the future gold price. What are you hearing from the people you're talking about where gold is going to go in 2021, 2022?
Well, I firmly believe that there's going to be some contraction perhaps of the gold price, but all of this, I think, mimics a lot of what we've seen in 2008. There was the initial spike in 2008 when the crisis hit. Stimulus packages started to come in. The gold price, settled a little bit, but it really started to rally again in 2009, and that rally continued with the amount of stimulus packages and money available, and money looking for safe havens really after any crisis, and that gold prices continue to increase through 2011. It reached highs of, I think, 1,800 per ounce. And then it sort of leveled off in the 2012, 2013. And only really in the period 2014 to 2018 did the gold price drop down. But interestingly, it dropped down to still no lower than half the price it was before the GFC. So I believe, given the amount of stimulus packages that is now coming on board, it's actually extremely similar to what we've seen in 2008. The USA is talking about $3 trillion. Europe is about $2 trillion. And I think China's at $3 trillion as well. So we're talking about a lot of money that is flowing into the system. And a lot of that is finding its way into gold. And I believe, although there might be some retraction of the gold price in the short term, long term, we're going to go see the overall trend that we saw after the GFC, which is, sort of a 3-4 year event.
Yeah. Well, look, good luck with everything. And we look forward to hearing how the plans go in the Carolinas for Lexington Gold. But Bernard, thanks for your time on this day.
Thank you very much.
Bernard Olivier is the Chief Executive of Lexington Gold. For more videos from us here at IGTV, join us on Twitter at IGTV and subscribe to our YouTube channel.